Welcome to Kingdom Wealth Creators once again. And as you all know, our vision is to fully equip you to create wealth for yourself, for your family, for people around you, and but also to do it the right way, right? And so this is our 21st learning session, August 15th, India's Independence Day. We're celebrating our 74th Independence Day. Amazing journey that this country has taken so far, and I definitely feel that we are on the uptrend as a country as a whole, and that is good news for us as investors also. And so I just want to wish you also a very happy Independence Day. I hope that you know, regardless where you are, some of you I know are not in India, some of you are abroad, and all of that. I just want to wish you all happy Independence Day. All right. Okay. So quickly look at the weekly performance. On the short-term cash trades that we've done so far, I want you to know that as of now, these are shares that I've bought. I'm holding some. I've sold some. Again, these are not. This does not mean I bought 10 shares in each of them. It depends on how much I. Some of them I bought a few. Some of them I bought quite a bit. Some of them are long-term. For example, Ashok Leyland is a long-term sharehold for me, but there are a lot of short-term holdings also in this. And if you look at this, the prices have gone down a little bit because of Friday's crash. But other than that, we're still looking at about 8 to 8.5% gain. Time I bought many of these shares. Some of them I've exited. Adani Port I exited yesterday, and Tata Motors I exited at 129. But I still have a few more. But I showed that exiting so that you can understand that was for an exit. And so overall, it looks okay. Still not too bad. But obviously, it has come down a bit because of what happened on Friday. All right, and so that can happen. I want you to know that there is no straight line movements in the market. The market will go up, will go down, and I think it's important that we change our perspective to a short-term perspective, where we're looking at valuations, we're looking at technical charts, making these decisions. It works out. Most of them have worked out so far for me, and I'm really happy with performance. And anyone who took those recommendations alongside me and said, "Hey, I also trade the same," probably I'm making money, which I'm happy. All right. So let's look at the market outlook. Okay, last week we had this was the trend line that the Nifty was showing. You can see there was a bit of a bounce of the. It actually broke down the long-term trend line, and then it bounced back, and it was above the trend line. But on this week, we saw at the end of the week, this is what we have happened on Friday. Friday eve afternoon, there was a huge crash, almost 150 points down, and then 180 points actually went down, and then recovered to about 120 points. But you can see that it bounced off this level, this 11,100 level. It bounced off, so there is continued strength there. And I don't really see. You can see there's a lot of support here. Okay. And I don't really see this as a long-term issue that the market is going to crash. Of course, there is corrections, and this correction also has to do with a lot of the waiting for the AGR cases, things like that. But correction is healthy. You can see here it's been sitting in this area of 1,200 to 1,300 for a while, and so it's been trying to go up. There hasn't been any strength. And so it's good for a sell-off. In one sense, it's good that there was a sell-off because that helps stabilizes the market for an uptrend later on. Okay. Do I think that it's going to go down furthermore? I'm not very sure that it will, even though the technical side, so you can see the MACD is cut, you can see that the trend line is cut. It actually went below the EMA, but I don't think this was a huge breakdown. It's more of a bit of a correction. And it was a huge correction. That's the only thing I can say about it. But overall, I still think the long-term trend is bullish. We have a lot of support going downwards. We have to. And I don't think it's easy to break down those levels. 10,850 is there as a huge support. If it goes below 10,850 at any point, that's when probably an actual bearish signal starts. But as of now, I don't see that. And I'll tell you why. Okay. Even in the Bank Nifty the week before, it went down, broke down. It bounced off the 21,000 point here, and then it found again support at the 21,400 mark. And so again, you look at it, there was a possibility of going up a trend line And I said that if it cuts this 22,350, 400 range, it could zoom up. What happened is it actually kissed or kind of just touched that point, and then there was a bit of a reversal. Again, it couldn't sustain above that level, came down, but it again found support at 21,500. Again, that's a good area of support, and it didn't close in a very good candle. Okay? This candle doesn't look all that great, but again, I don't think uh, the indications are that it's going to crash. Of course, there will be correction, and I think that's the modus or the trend that we're looking at. The outlook for the next week or so is consolidation, and we have to see if the trend lines break or go above for a possible breakout. But as of now, also the AGR case on Monday, they've been postponing it for the last 1 week. They postponed it on Friday to Monday. So again, we're waiting. Everybody is in this waiting game. But let me tell you why I think positivity is there. Okay. Now, if you look at this, this is the trend of the buying by FIIs. FIIs are the foreign investors, foreign institutional investors, and DIIs are the domestic institutional investors. I can tell you that throughout August, the DIIs have been selling every day from August, the beginning of the month, August 3rd, I think was the first trading day, till now. They haven't stopped selling. Okay, every day they will sell. Every day. It's like clockwork. Okay, every day morning they get in and they say, okay, we're going to sell. We're going to book profits. But on the other side, the foreign institutional investors have been buying every day, except for one day when they sold for a net 68 crores or something. But other than that, every day, even yesterday when the market crashed, you can see that they actually bought for 46 crores. They did sell, but the net purchase was 46 crores, even though the domestic investors were selling. Okay, and so if you look at this, you'll see that most of the time you see a range of almost, a gap of almost 400 crores, plus or minus 400 crores in the negative. But yesterday there was almost a 750 crore, negative or minus net spent, and which is why you can see that the market went down quite a bit because the domestic institutional investors were selling quite a lot. Not that they were selling excess, but it's just that the foreign investors also sold a bit and then they recovered. But they did recover in the afternoon. So definitely see if they continue buying at this trend, because what you can see is a couple of things. One is gold prices and silver prices have gone up and now they're kind of correcting bit down, which tells me that people are getting back from the precious metal sector and getting back into equity. Okay. Usually, if you see gold and silver going up very high, that's because people are afraid that the stock market might not perform well, so they're trying to put money into a safer bet, which is usually precious metals. But when you see money coming out of precious metals, they're probably looking at saying, okay, the stock market looks a little better now. I should put my money back in. That's one thing. The other thing I want to show you is this. This is the Indian Volatility Index. Okay, this is a key indicator for especially FIS, people outside who invest in India. Now, way back in 2020, Jan, Feb, March, before the market actually crashed, you can see that the VIX was sitting around 16, 15, 18 in that range. Yesterday, the Indian Volatility Index hissed 16.24, which is almost in the January-February range of 2020. You should see that this actually went to 86 or so when the markets crashed in March and April. But today we have come back almost all the way back to this position. Also, if I want to take it deeper, I don't have it here, but if I were to tell you the other than a couple of stock exchanges, all the major stock exchanges have recovered their pre-pandemic highs. For example, the Nikkei or the Japanese stock exchange, the Shanghai stock exchange, of course the US markets, a lot of the European markets, all of them have more or less recovered their the levels that were there before the coronavirus came in. And so we are the only ones who kind of we and I think the Korean markets are kind of lagging behind yet. And so if you look at all the global markets, they're all going up. That means for us also that trend is very likely to come. But again, corrections and slowdowns. Now, what is the importance of VIX? Okay, I want to tell you about this. As long as the VIX is this low, the chance it is one indicates kind of a bullish trend, but the second thing is that these huge falls and sharp reversals might not be there so much. Okay, you can see more or less the market has been very quiet, which tells me that intraday we probably are not going to make a lot of money. It's better to do short-term trades. And if you look at the outlook of the portfolio that I built up for the last one and a quarter months, you can see that for the last 1 month or so, it's gone up by 8% simply because I have reduced intraday, focused on short term. Okay, so that's my outlook for this week. I definitely think there will be a bit of correction and consolidation. The AGR case has to be resolved, but eventually our outlook is still, for the most part, bullish, unless it breaks down some really important levels. Okay, so those are my thoughts for the market outlook. Now, I had a couple of questions that came in, so let me answer these questions. Okay, first, how did you start your trading journey? What were the mistakes you made, or what are mistakes that new people can avoid? Well, I started my trading journey when I was, I think, 22, 23 years old. That was almost 16, 15 years ago. And I was a greenhorn. I had water behind my ears. I was wet behind my ears. I had no clue what the market was like. But one of my friends told me, hey, why don't we go and visit this brokerage called Geojit in Trivandrum, and we went there and we started investing a bit, and I started learning a bit. I love numbers, so for me, this made a lot of sense. Numbers wise, it was very interesting. That's how I caught on. Obviously, years later, I studied finance, I studied accounting, became a world champion in finance, and I also, understood the power of understanding the fundamentals and the technical side of things. And I'm still learning. I just want you to know that this journey is not over for me. I'm still a novice in so many other things, especially in the stock market. There are many things that I still am learning. And I think that's a perpetual learning journey that you go on, and you should never stop. You should continue to learn. And so that's how I started my trading journey. I was pretty young, much older now. I made tons of mistakes. I think mistakes, even today, I make mistakes. Okay, I'm not saying that mistakes cannot happen, and I would be a liar if I say I don't make mistakes when it comes to stock. It comes to investments and trading. I definitely do still make mistakes. I learn from them. That's the important part. When I make a mistake, what do I learn from this? Especially in my thinking, I've learned to control my thinking so that I understand. Hey, if you think the right way, this will do well. If you think wrongly, uh, because it can get very emotional when you see market prices going up and down. You can get very emotional. You want to cut your losses, or you want to do something. You're afraid to pull the trigger. There's a lot of psychology involved too. Sometimes if you make a loss, then you probably are a little scared or skittish to go into the next one. So all of that I have just let it aside. So that's how I started my trading journey. I still am on my journey, and I hope that for you, this helps. Okay, this question. Okay. Are you a price action trader or an indicator trader? So someone asked me this question. I said I'm both. So I do draw trend lines. So I definitely love price action, but I also do indicators. So it's a mixture of both. Not a lot of people do both, but for me it makes sense. Okay. How do you diversify your portfolio? Okay, so I usually have long-term holdings, short-term holdings, a bit of intraday now. As the volatility in the Indian market has come down, I've reduced my intraday trading, barely none today. Okay, basically almost zero. Just so you know, most of my trading is now focused in the short-term portfolio of my investments, and a bulk of my investments are there now. Almost 90, 95% of my investments are in my short-term space of my portfolio. And again, how do I diversify it? Even in that, I diversify among depending on which sectors are doing well. I don't stick into one sector alone. Try to incorporate a lot of sectors as much as possible. I hedge them, and so all of those play a role. Okay, uh, how much of your capital do you put into each trade? Okay, so this is important. I think so. If when it comes to cash trades, I tell people out of your total, if you're investing, say this much X amount into cash trades, short-term cash trades, try not to put more than 8 to 10 or maybe 12% or maybe even 15%. Okay, let's say 15% of your total investment, short-term investment into a particular share. What do I mean by that? If I have 2 lakh rupees or 1 lakh rupees, I shouldn't put more than 15,000 rupees into, say, into Reliance or into Ashok Leyland or Tata Motors. I should diversify. So if I have 1 lakh and I put 15,000 each, that's about 6 to 7 shares that I can diversify into. Okay, so that's the reason why I say that is diversification. Why it's important is if one share goes down drastically, it can affect your portfolio. And so it is easier to put all your, it's better to put your eggs in different baskets than putting all of them in one basket. Okay. So how much of your capital? Say 8 to 15%. Okay.